to show you when dilution is important and when dilution is not important, even though it seems important. So this might be a bit confusing, but I will explain it with this stock right here, RKTO. So as you can see, RKTO on the 27th of May had a very large price increase of around 311% to the all-time high, or at least the peak in this in the recent times. So to explain this increase in price, they did two things. So previously, they were a biomed company. They focused on producing patents and probably pharmaceutical medicine, and that wasn't working very well. So if you look at the financials of the company, they actually have or had they have estimated 4 million cash, 2.5 million quarterly burn, and a very small runway. uh, this estimated cash is of I believe March and end of March from the quarterly report. Of course, not including the money they raised just now from the ATM, right? So they have no product, they have a team, probably of people that they employ, and they decided to move into the AI space. So on the 15th of May, which is very interesting, on the 15th of May, there was no reaction to these news, but they stated that they moved or they got royalties to a chip that does not require any power, so something supposedly very innovative, so they get exclusive royalty rights to this. So then following another 12 days, they decided to rebrand their whole company into a AI rocket science chip firm, right? So they mentioned they will rebrand and they will change their ticker from HOTH to RKTO. They also said that they hold exclusive rights to a next generation nanomagnetic AI chip technology. Okay, so this looks like good news, right? And of course, when this comes out, stock price increases. You probably have momentum, momentum algorithms, as well as just initial investors causing this pump in price. And whether this is a strategy from the company to raise money and to maybe survive as a public company for as long as they can by doing this rebranding, which it kind of seems to me, because even though they hold exclusive rights, there is no updates on what the chip is being when the chip is being produced, what is happening with the chip, absolutely nothing. I remember that one filing stated that they hired a university advisor to kind of look over the operations or something, but logically speaking, with a team of biomedical employees and the board of directors, or just directors who have no background in AI, apart from their new appointed university professor, I believe, if I'm not mistaken, this firm has nothing to do with AI. So this pump and price was purely momentum traders coming in. As you can see, volume is before is 7 to 10 to 20K, which is absolutely nothing, and it goes up to 30 million. So this is a great, actually great strategy made by this board of directors, that they decided to rebrand their whole company, because this way they were able to raise 3 to 6 million through their ATM, maybe even more than 6 million. And they had an estimated reported cash last quarter, so 3 months ago or 2 months ago, of 4 million. So they were almost able to double their current liquidity, and by doing so, they can continue operations. And now, yes, now they can actually, if it's true that they are actually going to work in this AI space and not just create these type of news to raise money to, I don't know, continue being a public operation and maybe do some other shady stuff, then yeah, that now they have capital to maybe actually go work into it, but it's on very early production stages, and they have no actual sources or at least public information really proving what their product is about and whether it's actually succeeding, it's finished, what is happening with it. They only have this small filing that I showed you at the start. So what I wanted to show you is when is dilution not important. So as you can see, volume came up to 25 million. These are hourly candles, which is astronomical for a stock trading even 71 shares an hour, right? So this volume is is the reason why dilution is not important in this specific stock. So as you can see, um, if we go to dilution, this company had ATM. So they have a 6 million ATM, which they released on the, I can go actually here. So they released the ATM. I believe it's so here on the 3rd of June. Yes, this is the last Okay, so they increased their ATM by another 6.8 million, but before this, they say that they had proceeds of 9.27 million. And if we go back to, I think it would be this prospectus, here they say that they have sold 6.6 million. So in a couple of days, they have sold 3 million from the date of 27th of May till the 3rd of June. So if we go back to 27th of May till the 3rd of June, right? If you look at this stock's public float, it's 15 million, so 15 million shares. So if they sold 3 million at approximately $1 a share, that's still quite dilutive, right? But because the stock was trading at such high volume, I made a little dashboard to show you 28 May, to show you, for example, why this ATM is not important at all. So as you can see, these are all the trades placed. The largest notional values overlook the ATM. So ATM had no impact at all. They raised such high volume because of momentum traders that they could easily dump the shares in the market. As you can see, they dumped 3 million in 3 days, which would be impossible to do before. Impossible, only with these news. So this is kind of a way to show you that in this case, ATM is not important at all. And after the 3rd of June, and this is a part where it can actually affect the stock price and pump it down more. So I wanted to take a short here, but I decided not to because, I don't know, because I had money in other positions. But from the 3rd of June, they increased their ATM by another 6 million. And as you can see, volume is falling down here. Falling down. They probably did sell, and that's after the 3rd of June. Something I look to kind of see where they could have possibly sold is this average shares. So this is average shares per trade. This is something I did. As you can see, it's pretty high on the 4th and 5th, which is right after they amended their original ATM by another 6.8 million. So it's kind of more inclining to determine that they actually have sold the ATM on that day, because average trade had more shares being put out, and usually you look for patterns like same order values or same share values, same notional amounts, or a lot of small orders, because it's usually algorithms pumping out the ATM. But anyway, as of 3rd of June, they had a lot of, they still have 6.8 million, and it's unknown, of course. I still haven't built what I wanted to build, which is like a kind of algorithmic teller that tells you at which prices you had similar amounts of shares being dumped into the market, and that's etc. So as you can see, price did start falling down because volume is small, and they opened up 6 million ATM, and as volume is falling down, they probably still have the usage of the ATM. The news are gone. There's no more hype. There's no more momentum, and the stock is just gonna plummet down sub one, most likely, unless they, of course, release more news and you have algorithms picking them up and then getting momentum traders to enter the trades and bumping the stock price up again. So this is kind of a me showing you where dilution, even though it looks kind of important on paper, if you look at really the metrics, it's not as important. So now I want you to look at this stock. This is where dilution is much more important. So okay, it's fine like this. Okay, so CETX announced on the 3rd of June that they were having a reverse split, as well as they have a large amount of adjustable warrants, which is up to $3 million worth of adjustable warrants. Let's go CETX. Up to 3 million. There you go. This is the one they had previously. So yeah, $3 million ish worth of warrants with an adjustable price. So because the warrants had a exercise price very high, the firm has to then reduce the exercise price in order for investors to be able to exercise them and actually get the value that they were supposed to get at the start. Because instead of getting paid in cash, they got paid in warrants, and it's 3-ish million, right? What this firm did is 5 days before the reverse split, which occurred on the entry or on the start of 5th of June, um, they announced that they were going to take the lowest VWAP of the 5 days before the reverse split and the 5 days after the reverse split and issue $3 million worth of shares. So let's say that it's at 5, just an easy number at 5. That is going to be 500 or 600,000 shares. So they would have to issue 600,000 shares to pay back the the investors. Public float still has not been updated. It will be updated soon automatically, but public float currently, because of the reverse split, which was a 1 to 10, public float is 1.23 million. So as a percentage of public float, that's around 50% of public float. And when dilution is important, or when actually looking at the percentage that the dilution will affect float, when is the time when that is important is when you have very low volume and the stock is not being traded at all, because you have so many shares and you're going to have so much investors, because they have been waiting, and when they get the go sign to exercise those shares, which maybe is going to be at 5, they're going to try to, or they will most likely start exercising them instantly. And because there's such low volume for now, unless of course news are specifically put out to drive the price up, or momentum groups are going to push the price up in order to maybe help these, not to help, but maybe it's some sort of scheme, I'm not sure. But what I'm trying to say is that when you have very low volume, that's when it's very detrimental. That's when this dilution is very detrimental. So the reason I shorted here was because of the adjustable warrants as well as the reverse split. As you could see, volume is kind of low. If you would look at RKTO, after the news, volume was very, very high. And because volume is low, it's kind of safe. And also, if you have level 3 data, you can see that most people were shorting CETX on the 28th. Not the 28th, on the 3rd. One second. Yeah, this is lagging. Okay, so here you could see a lot of people were. Why is it? Yeah, this is a bit slow. Okay, so there was a lot of bids, not I mean a lot of asks who, and if you see these are actually sell trades because you have trade ask and fill bid. So these are all these were all actually asks. So you see a lot of people were dumping the stock at this price, and there was no. This is the most important. There was no momentum, because a lot of the times after reverse split there is a very large gap up. Um, there's no momentum trading and there's no algorithms picking up this reverse split, so it's just going to be negative. And if you can kind of see this, and it's usually, for example, you would look pre-market, and usually pre-market uh, around 4 a.m., of course depending when the news come out, but if you have algorithms picking it up and momentum groups kind of promoting the stock, it will already pick up pre-market hours in order for then retail investors to get in when market opens. So a lot of people think, wow, this stock is going to go 3-4 times its price. So as you can see, price is going down, and they also have the adjustable warrants. So it's very important. You need to know when dilution is going to occur, which you can do with our website CETX, or our software. So you can see here, you could in live dilution you can catch. That's actually where I called CETX. Then you can check here. It says it's fixed price, but it's actually adjustable. You just have to read through one filing, and you have the summary right there. It's very simple. You have a reverse split that's going to be effective on the 5th, and then you will have 50% of the float uh, in a couple of days is going to be made up of warrants. You're going to have people exercising warrants into the public market. They're going to be selling the warrants. They exercise them, and they are most likely going to be selling them. That's a lot of sell side pressure. So I just decided to price the stock way lower. I decided to I saw that there was no large volume, that there was no momentum pre-market, there was no algorithms, and there was no momentum groups pumping the stock. There was just people or previous investors who saw that the reverse split is happening and decided to sell. So if you position them yourself with them, you check that there's no large orders, there's no algorithm kind of pumping the stock on these news. So then but this is when it was announced, not when it was effective. So now we go when it was effective, which is on the 5th. This is the most important thing. So a lot of times reverse splits are actually very positive, and this is exactly what happened here. So on the 5th of June, as you can see, the stock price, as you can see, volume increased a lot. And the reason why it increased is exactly because of these momentum groups, maybe even algorithms, but purely just momentum traders. So people see the reverse split, they start catching the stock, they start buying, and then you have Twitter, Reddit, and all of these, and also momentum groups just spamming, and then you have retail buyers buying, and that's what pushes the price up. Then also you have liquidity providers or market makers, which you can easily see in the flow. There's people just providing you and all of your bids or asks are being filled, and that is kind of propagating this move up to be much larger than it was actually supposed to be, even though you didn't have that many. You had similar amount of buys and sells, and as you can see, there was a lot of volume, but volume died because it was just a momentum move, and it's just going back down. And the best thing is that I got in so early that I believe that when after the like up until the 12th of June, stocks should theoretically push lower, but of course there's still a chance that it might come up because you never know. There might be another momentum push, some sort of news, because a lot of the times news are taken in different ways. When it's reverse split, it's very negative news, but most of the times stock price actually pumps up and then goes falling down. So, but still, the warrants are definitely going to be dilutive. But the main key is to price yourself before other investors do. So maybe other investors will only notice this before. I'm already in this move way before everyone else. I'm way before the warrants are gonna be the warrants are still not sold. They're actually exercised because they were exercised a long time ago. Uh, no, they're not, they're issued, but they're not exercised because they're waiting for the price to be adjusted. So yeah, well, that's basically it. So just to sum it up, you should look at dilution and really price in dilution when volume is low. When there's not a lot of people who find it, you can easily tell it by what is happening with the volume. If there's not, I would like, not more than 5 times the average volume, you know that this dilution still hasn't kind of hit the market yet. And for example, just the issuance of the reverse split is also a great way to kind of position yourself before the retail traders and the wider market, I would say. So it's not easy to explain this. It's more, you need everything on paper, bullet point by bullet point, and like text writing. When you talk, it's like kind of you make up your own story with a lot of different variables that you have to kind of not estimate, but you have to make up your story, and that you have to hope that it's correct. So recently I've been checking out level 3 data to just like kind of analyze different patterns and see also when dilution is an important factor